Chicago, it's Startup Hype Man, the podcast. What's up, everyone? My name is Raj Nation, founder and chief pitch artist at Startup Hype Man, where we help startups not suck at how they pitch themselves. How? By making sure their audience sees them not as the best, but as the only. And this podcast is the only show where you will hear from leaders in the startup ecosystem sharing a piece of their heart, their mind, and their story on how they are charting their own path, growing their companies, and choosing not to play the game, but to change the game. Before we get going, hit the subscribe button on your podcast app so you never miss an episode. Also, head over to startuphypeman.com and subscribe to our Point of View letter, where we share original articles, insights, and resources, all to help you become the only of your industry. All right, get your popcorn ready and get hyped. It's showtime. Ladies and gentlemen, making his way to the microphone from Austin, Texas, he is the COO of Phunware. Please welcome Randall Crowder.
I love it. You prepared me for it, but I didn't know it was going to be that good.
I love that you even, for everyone who's listening to the audio of this, you wouldn't have caught this, but check our LinkedIn afterwards because we'll put the video up. Randall did the flex and everything. Like he was ready. The only thing missing was pyro going off in the background.
I usually have a smoke machine in my old office, but as we discussed, we moved into the new office. I don't have the smoke machine, anymore. Small aside, and I'm throwing off your whole flow here, but I got to tell you this.
Yeah.
Being in the Army once upon a time, I used to know a guy, and I'm not going to name his name because I don't think he's still in, but he had a directional heater in front of his desk.
Yeah.
And actually in front of his desk, when you're sitting in front of him, it was always about 20 degrees hotter than him sitting behind his desk. And he just wanted to see how people reacted to just being really hot. And it was, let's just say, he was in and around the PsyOps community, but I have seen this desk. It's incredible. I was like, I've got to get one of these. So anyway, back to our regularly scheduled programming.
All right. Well, as I mentioned, he's Randall Crowder, the COO of Phunware. Phunware is changing the game for organizations around their customer acquisition and their customer tracking. They are helping some of the world's biggest brands better identify, acquire, engage, manage, and monetize their customers. And when I say some of the world's biggest brands, I mean the likes of the NFL, NASCAR, Fox, the Olympics, so many more. They're a public company at this point. Over the years, they've raised over $100 million in private capital, and then over $100 million as a public company as well. And Randall himself is a multi-time entrepreneur, an investor, very embedded in the startup ecosystem. Today, we are going to cover something that he's got a lot of experience in, having raised over $200 million in total capital for Phunware alone. And that is raising capital through hidden funding opportunities. So Randall, once again, welcome to the show. Raising capital through hidden funding opportunities. Why is this on your mind? Why is this important to you?
Oh, man, it's one of those things that if you're going to be an entrepreneur, you've got to figure this out. And it's actually where I started my entrepreneurial journey. I actually started, maybe it was in a prior life, I was in the military. So it's kind of all about know your enemy, right? And so I started networking and working, within kind of the angel community, which led me to kind of the venture capital community. And then I fell in love with it and did it over a decade as an angel investor and then a venture capitalist with my own fund. And I really cannot impress upon people enough. You've got to know this game because someone somewhere is going to, either beat you or outraise you. And so you absolutely, if you want to do the bootstrap game, I commend you. If you're able to do that well and execute on that well and keep 100% of your cap table, that's amazing. But more often than not, I think most of the listeners and watchers here, whether you're raising seed capital or Series A, you're looking for a bigger bat to swing. And, in my day, and not that long ago, it was venture capitalists or maybe angel investors if you were early. Now, there's so many different ways to think about funding. And I say that as a huge arrow in the quiver of every entrepreneur. You know, the VCs and the angels aren't the only game in town anymore. So the more you educate yourself and the more you learn about these kind of asymmetric sources of funding, the better you can, a better deal you can get. But really also the relationships. You know, I think that gets lost in this. And the reason why I think about it, to answer your question directly, is funding is less about the capital, which is a commodity, and it's more about the relationships you build. How are they going to help you with your business? How are they going to help you with hiring? How are they going to help you with credibility? And so the more sources of capital you can find, you know, the stronger you will be as an entrepreneur, 100%, and the more you'll protect your company.
We're going to dive a whole lot more into that in just a few minutes. Before we get there, let's learn more about Randall, the person. Now, you mentioned your experience in the military. You went to West Point. Then you became a captain in the U.S. Army. No small feats by any means. They're very significant accomplishments. At Startup Hype Man, several of our clients over the years have been members of the military community. So I've been able, just through by proxy, been able to see what kind of unique perspective they've been able to bring to the table as founders. I'm curious, not only were you a captain in the Army, you also served time as part of that in Iraq. Your experience there, you know, I'm sure it was incredibly challenging, incredibly difficult. I'm sure you had probably some very good memories of the people you were with as well at the same time. Yeah. What do you take from that experience in Iraq that you can point to say, that's helping me today as an entrepreneur?
Absolutely. What you do, not only, you know, when the pressure is on, when chaos is all around you, you know, but how you persevere through that. You know, how you respond to it. You know, there was no playbook for what we were going into. I'll be honest, I can't claim to be, you know, some patriot that was out there, you know, doing amazing things. I went into the military in the 90s when Rumsfeld was downsized in the Army, and I went to West Point in peacetime. 9/11 was my senior year. I still remember walking into class right after, you know, 9/11 happened. We were actually on alert at West Point, and they thought a plane was actually coming and possibly going to target West Point as well. And I remember walking into class the first day, and we had this almost cartoonish colonel as my teacher. A lot of active military members come back and teach at West Point. He had jumped into Grenada or something, but I mean, he is what you would imagine is the all-American military colonel. You know, jaw like this and gravelly voice, and we all sit down and he's kind of staring at us, and steely-eyed killer is what they call him. And he goes, "Well, cadets, you're all going to war." It was just whoa, that's a wake-up call. You know, when you don't really think that that's your future, and that, everything changes. But that's entrepreneurship. You know, every day, you know, it's not what you see in the movies. I mean, entrepreneurship is tough. And they're throwing something at you all the time, and you were fighting for your life most of the time. And you got to really rely on the people around you. And so, you know, whether it's life and death on the battlefield or life and death in the boardroom, you know, you have to build really cohesive teams. You have to learn to be able to delegate responsibility to the people you trust. And you have to be ready for anything. And I think that was something that I saw, you know, in Iraq in spades. And I think everybody who is served, whether it's Iraq, Afghanistan, you know, there's so much asymmetry. We were never trained for that war. We were training for Russia or China, you know, big force on force, large mechanical engagements. And all of a sudden you get thrown into a town, and, you know, 1 minute you're, you know, a peacekeeper, another minute you're a trigger puller, another minute you're a civil affairs officer. And, you know, later on in the day, you're handing out candy. And then getting shot at again. And so being able to process all of that, maintain your humanity, you know, keep, you know, commander's intent and vision, and keeping people motivated. You know, that's entrepreneurship in a nutshell. I mean, it is chaos, and you have to be able to understand, you know, how to still lead amidst all that chaos.
You know, in the startup game, we often talk about pivots. You mentioned you go to West Point during peacetime, being I'll graduate, and then I'm it's going to be fine. And then, you know, you walk in the first day of class and find out you're going to war. I think that's the ultimate pivot, right? So can you actually talk us through what was your mental conversation like when you had that realization all of a sudden one day that you're going to war?
Yeah, you know, I think that there is something, you know, I've kind of had these moments of soul searching. And one of them was actually even, you know, before West Point. You know, look, I was going to go, I'm from Austin. I was going to go to UT. I was already accepted to UT. I was going to have a lot of fun. I was having a lot of fun in high school, and I had no intention of serving my country. I'll be totally honest. But then, through a kind of a series of events, and I'll truncate the story, ended up, having the opportunity to consider going to West Point. And so I started having this kind of soul searching moment of like, well, if I don't at least try, I'll always wonder. And there's a famous kind of saying, there's only two pains in this world, the pain of regret or the pain of discipline. And I've always chose the pain of discipline because I hate the thought of regret. And I also, let's be honest, and I'll be totally transparent throughout this entire session, there's a little ego involved in that. Like if I don't go, am I admitting to myself that I couldn't make it or that I couldn't hack it? And I refuse to admit that. And so I end up thinking, still in the back of my mind, well, I probably won't get in. So that's the both worlds, right? I can say I tried, I don't get in, and then I'll go party at UT anyways.
Sure.
Well, I got in. And then there's another soul searching moment where it's like, man, this got real fast. And we're still in peacetime, right? So now I'm like, all right, back to that same, thought process of like, do I want to let myself down? Do I want to admit I can't do this? I never met a challenge I didn't like. And so it's like, all right, let's get it on. Let's see what happens. But again, still thinking, they're downsizing the Army. People were getting paid like 80 grand just to get out of the military after graduation. I didn't grow up rich. I figured this would be a good chance to, pay for college instead of my parents having to pay for it. And then like you said, this kind of moment happens where now I don't have control over this one. I'm in it. And you really got to just kind of say, okay, what kind of person do I want to be? I do not put my name on something that I'm not all in on. I've had 2 relationships my whole life. I've had 2 real jobs my whole life. When I'm in something, I'm all in. And I think it started all the way back then where it's like, all right, I'm going to be the very best version of an officer that I can be. And I think a lot of people didn't even know I was getting out. So you serve 5 years after West Point. And I remember when I put in my paperwork, I was actually stop loss my 5th year. So they got 6 years out of me. And then I did 2 years of guard. But, that 5th year, when I was telling people, okay, hey, you're going to stay in? I was like, no, I'm getting out. Everyone was shocked. Like all of my, leadership was like, whoa, I thought you were going to stay in, general track. Because I made the most of it. And I did everything I could to be the best version of myself during that process. And I think everybody needs to really take stock of that. Like if you're going to put your name on something, if you're going to do something, you need to be the best version of yourself when you're engaging in whatever it is you're doing. And not because someone's watching or you're trying to raise money, or trying to impress a girl or a guy, just because why not? Anything worth doing is worth doing well. And if you're going to do it well, go all in.
The pain of regret versus the pain of discipline. If that doesn't describe the startup journey, I don't know what does.
Right.
All right. So let's talk about Phunware. You joined the team you invest in the company and then join the team as an operating partner and then the COO. You've got pretty extensive history before then professionally in the startup game. Now, we don't have time to go through all of that, unfortunately, but at least talk us through how you first see the opportunity with Phunware, why you choose to invest. And then, I gave a pretty crude and shortened introduction of Phunware up the beginning. So maybe you can expand upon that as well for the listeners.
Yeah. It actually ties back to the last question about being the best version of yourself. Because, life is serendipitous. It's weird how things work out. I think a lot of people, especially the younger generation, don't realize this is a very small, big world. And it's crazy how your reputation will come back to either haunt you or help you. And so when you're doing things, don't think, well, I'll screw this person over because, I'm moving next month and I'll never see them again. Or, I'm going to kind of be lazy in this group, with this, school or this, program. And because, who cares? I'll graduate soon and I'll be gone and doing something else. It's like, no, man, I've had weird people circle back through my career, both good and bad, where I'm like, I remember you. And, it's a totally different game. Or sometimes when I walk in and I'm like, ooh, I hope they remember it and they like me. So in 2009, I was doing angel investing and I took over the Central Texas Angel Network pretty much after it got started. Grew that to be one of the most active angel networks in the country within about 3 years. But while I was doing that, I was networking with a lot of people in Austin, and a lot of people were coming here from all over the world. And the founder, one of the co-founders of Phunware, had come here to kind of be an investor. And I ended up talking to him a little bit and saying like, hey, it seems like you still have a little bit left in the tank. And I have a feeling you're probably still going to, want to be an operator. And he's like, no, I want to be an investor. And so sure enough, 6 weeks later, he calls me up and says, hey, I need to talk to you. I was like, I bet you do. Like, what do you want to talk about? He's like, I got an idea for a company. And so that was the genesis of Phunware. We riffed on that. I helped with the first $1.5 million seed round. And then I stayed in the investment game. I stayed, as an angel investor and then started my own fund. But, fast forward, we were both ex kind of Army Rangers, had a lot of, kind of common ground, common camaraderie, kept in touch with the company just from afar. But then fast forward to kind of 2016, 2017, really started, becoming interested in where the company could go from where it was. Started out as a custom mobile dev shop, but now it wanted to be an enterprise technology company. And that's what I was doing as a VC. How do you leverage technology to make inherently inefficient industries more efficient? That's my jam. I love that. And so take all the information in the virtual world, curate it, make it actionable, and inform real world experiences. That's my passion. And so Phunware had an opportunity to do that. So I came back around kind of 2017, and there was plans to possibly go public. So I put about $3 million into the last round before we went public. And the old COO ended up having to step away. And the founder asked me, said, hey, is this something you think you could hang up the VC hat for and do this full time and help me build this thing? And it would have taken a special company for me to want to do that. Being a VC is great. I love talking to entrepreneurs. I always say they're like little emotional drug dealers. Like every time an entrepreneur comes in passionate about what they're doing, like it's a jolt of adrenaline and endorphins. And I love that. And I love helping them. But I think it was about time, after a decade of doing that, to kind of be one team, one fight, all in on one thing. And so I, kind of started full time right at the end of 2017, beginning of 2018, and really never looked back. It's been fun scaling this business. This is the future of, where engagement is going to be. As you mentioned, we've worked with some of the biggest brands on the planet, and really it's all about helping people establish, mobile ecosystems that turn your phone into a mobile concierge. And so like our biggest deployment recently is Atlantis down in the Bahamas. If you go down there, we tech enabled the entire island. So it's 140 acres, wow. Anywhere you are on the property, now you have access to everything you could possibly want as a guest. So we've kind of tech enabled the guest experience. They made $500,000 through their app in the first couple of months. And so it's really exciting how people are thinking about not looking at the mobile device like a content consumption engine, and looking at it like a mobile computer that's always connected to a network and always connected to a customer. So how do we use that to influence customer behavior contextually?
It's interesting. I'm drawing a parallel here in your story. And I don't mean, I say this not to downplay your past experiences, but you talked about at West Point, you're there, you think it's going to go one way, and then one day you're asked to go to war. You're an investor. You think you're going to keep being an investor. And then one day the founder of the company says, do you want to go to war with us? Right. Essentially, do you want to join our team and go to war with us every day and do this thing? And as you mentioned, right, it's the willingness to, and the mindset of going all in once you decide to say, yeah, I'm going to do this. Yeah. Let's talk about our main topic, which is raising capital through these hidden funding opportunities. Now, as I mentioned in the introduction, you have raised over $200 million, and that's across essentially evenly split between private capital and public capital. Let's rewind back to the very beginning of the fundraising journey here. Now, obviously you put in money into the company, but then as you started to get this thing going, let's say beyond the seed capital you put in, what were your expectations? And maybe this is even pre-Phunware altogether, just original entrepreneur experience. What were you under the impression that the available options of funding were to you?
I will say, I think the insight in that question is spot on. So I think it's what most people face. I always assume that some rich person is going to kind of help you start your company. That's just that was what it was. You try to network your face off. You find somebody with more money and more time than they know what to do with, and you try to convince them to give it to you. And that's, I think, how most people's journeys start. What's really cool now is, even at that, let's kind of take it in phases, right? So at that seed level, yes, angels are crucial. And I think this is probably this was my biggest challenge. As much as I love to talk and as much as I have a lot of stuff to say, I actually don't enjoy being a salesperson. It just so happens that every kind of part of my life somebody had to do it. So I'm like, all right, I'll do it, but I also got made fun of by my employees 2 weeks ago for taking out the trash. Like it was on my birthday and I was taking the trash out, and like they were pulling up and they were like, why are you taking the trash out? I'm like, because it needs to be taken out. They're like, why are you doing it though? And it's your birthday. I was like, I don't care. Like, I don't have any ego in this. Like, I do what needs to be done when it needs to be done. And so, I think a lot of times people don't realize how important it is getting out of your own head and just, doing what needs to be done, going to those meetups, going to, alumni receptions. You have to find these people, and you don't just do it acutely. Relationships are built over time. And so you got to get going. Like, if you can't just be like, okay, I've got about, 2 more weeks of runway through my own, checking, I better go raise some money. Well, you're about to start a 6-month process. And so you've got to plan ahead for that. And you need to build those relationships. What are your, kind of primary endpoints? And then what are your secondary and tertiary, kind of spheres of influence? And how do you get, in front of the right people? That's actually the first checkbox for investors. Can you access capital? Because if you come to me and you say, I've got nothing raised and none of my friends and family are putting anything into this, and I don't really have that much skin in the game, but I want to use your money, good on you. Because if you can play with the house's money, that's awesome. But I'm immediately going to judge you for that. I'm going to be like, so you don't have anybody, no relationship that said, I love this person and this person is going to be successful and I'm willing to go in with this person. And if you don't have that person, at least I'll invest in the teacher who's mortgaged her house, maxed out her credit cards over, some hedge fund manager who's, got more money than anybody and doesn't want to put anything in it. And, I call it my walkaway factor. What's your walkaway factor? If I invest in you, can you leave me holding the bag and go do something else? And that teacher, she can't. She's got to make it work. She's got to run through walls to be successful. And so, the first funding is really yourself, credit cards, cashing out your 401k. I'm not telling anybody to do that, but that's what people do. And then friends and family. And that is your pre-seed round, people that can show that they believe in you. Then it's your seed round. All right, now I'm thinking about broader, relationships, people they know, people I know, people I've networked with. Go with your alumni groups. That's huge. But again, all of this is angels. What's cool over the last probably 20 years, and what we were riffing on even before the call, is all these other opportunities are now popping up to help you in the seed stage. Crowdfunding, really cool opportunity now to really just reach and talk to people just like you, normal people who are a lot easier to sell than, a lot of, curmudgeon-y old VCs. And so crowdfunding is really cool. There are ways to bootstrap. We did this at Phunware. It's called customer funded R&D. If you have a product, some of the things that I see entrepreneurs doing that are a huge mistake is thinking that one more feature is going to just solve everything. And really what they are is they're nervous. They're too nervous that someone's going to tell them their baby's ugly, and they're too nervous to put it in the front, into the hands of a customer. But your customers will tell you what they want. They'll tell you what they want to pay for. And so the minute you get, you'll hear these acronyms all the time, in Army and entrepreneurship, but, the minute you have that minimally viable product, that MVP or that POC, that proof of concept, get it in the hands of a customer. You can hack things together to kind of see what customers want, see what they want to do. It can feel a certain way to them, but maybe, it's a different way to you. A SaaS company might have all these inputs, but, you might not be able to afford to build a SaaS platform. So maybe you just use a really cool Google Docs that feels like you're putting in the inputs, but in the background, you're running around collecting all the inputs and then delivering them the service. So there's a lot of ways to get something into the hands of your customer, have them start paying you, have them fund some of the business. Angels love that. VCs love that. It shows traction, and it shows a lot of hustle. And then, kind of once you move past seed and you kind of move past kind of crowdfunding, customer funded R&D, you really start playing at a higher level. And I think that's the concern I have with a lot of entrepreneurs, especially here in Austin. You'll always hear this term dilution. You're always worried about, okay, if I raise this much money, how much of the company am I going to have to give up for that? And then what are the kind of milestones? How am I going to build value with the money I just brought in? So I'm balancing dilution versus value creation. And so I think what's a challenge is this, and you hear this all the time, do you want to own a smaller piece of something bigger and growing, or do you want a larger piece of something that, maybe doesn't have the resources to go where it needs to go? And so not only do you have to kind of keep up with the Joneses, you have to keep up with the market and the opportunity. In Austin, we're a bootstrap town. They're starting to move here now, but there wasn't a lot of VC players here. And what ended up happening was there's a lot of really good ideas in Austin. And all of a sudden they'd be like, okay, we just raised, $2 million, and now we're going to that'll last us about 2 years. And then someone in Silicon Valley raises $300 million and they just lap them 20 times and they're off to the races and no one will ever hear about it again. So, you don't want to be relegated to the annals of history because you didn't raise enough or be aggressive enough in your growth. And so when you want to raise aggressively, VCs are still largely your best bet. One, because of the relationships they have. Two, because of their decision-making ability. They can make decisions fast. And just really that credibility that they lend. Now, Phunware, we didn't really do that. And some of that was, the founder's choice. He had raised money from VCs in the past, wanted to kind of own. You'll see a lot of serial entrepreneurs, I think, try to do more with angels a lot of times if they had a bad experience with VCs or if they don't feel like they can access the VCs. And so Phunware was largely funded by angels, very big rounds by angels, and then customer funded R&D. And then the other one that I haven't mentioned, strategics. So we got in a strategic investment from Cisco, strategic investment from Samsung. Hit or miss. Those can be good if you can tie business fundamentals to it. But if you're just raising money and they're investing off their balance sheet, they're not going to have that same kind of aligned incentive to help you grow the business. Half the time the person that deploys the money isn't even going to be in that role, a year from there. There's so much turnover at these large corporate companies. So, and then what ends up happening is you try to raise another round and somebody says, okay, well, who's been in the deal so far? You're like, oh yeah, we got Cisco, Samsung, we got all these other people, these angel investors. You're like, okay, cool. How much are they investing in this current round? And you're like, well, the angels are done. They don't have any more money to invest. And Cisco and Samsung, we haven't talked to them in a while. So they're not investing anything. We're raising a new round. And they're like, oh, so no one. And you're like, and that's a real dirty little secret when it comes to investing. And this happens a lot in Silicon Valley where you might love getting, Sequoia into your Series A, but if they don't invest in your Series B, you might be screwed. And so you really got to think about, who's going to maintain enough dry powder to keep investing with you if people are going to have that preconceived notion that they're going to continue to invest with you if there's a good company here to invest in. And so picking and choosing is important.
I want to come back and just share a quick anecdote on the customer funded R&D point, because it comes up a good amount of times in the startups that we work with when we're building out their pitches, where they have this concern that their story isn't going to look good because, maybe they've been around for 3-4 years. They've produced some level of revenue, but they're like, no, but that's going to show that we're not growing fast enough or that, we're not a viable opportunity. And so one of the things we'll work with them on is being like, well, no, you need to reshape how you look at this in the first place. And actually what you have here is 3 years of funded R&D by your customers. Yeah. It's not that you were a 15K MRR company or whatever. Yeah. It's not that you only did 100K in ARR for 3 straight years. It's that you had a $300,000 in paid R&D. Most companies have to pay others to get to do R&D. You got paid for your R&D. And what that means is you got the product to a point where it's ready for funding. You're not asking for money to start making tweaks and tinkers. You've established the product and now you're really ready to go to market. And that perception shift internally for the founder is life-changing. But then when they go out and pitch that to the investor, it's literally pitching 2 different companies at that point.
Yeah. Oh man, you said something so important, and I hope really people took that in and really listened to it. How you frame your narrative and or reframe your narrative is so critical, and really getting that dialed in is so important. And I think that for what I always see, look at Amazon. I mean, Amazon, you could have invested in Amazon. So not even a private company, right? Public company. All the reporting in the world, all the information in the world, all the opportunities in the world. 10 years, none of us would be working right now if we had paid attention to Amazon when they were trading below $100 for 10 years. You could have just treated that as your 401k. Amazon understood that we were becoming an on-demand economy 10 years before anyone even knew what that term was. And not only on-demand products, but on-demand cloud services. So for 10 years, they traded below 100. On 4 separate occasions, the stock crashed by 60% or more. On one occasion, it crashed by 90% from 100 to like $6. For 10 years, you could have invested in Amazon below $100, and they persevered and stuck to their knitting. They were building data centers in the middle of nowhere. No one knew why. They were building warehouses in the middle of nowhere. Everyone thought they were crazy. And all of a sudden, the world woke up, kind of 2010, 2011, 2012, and they realized, oh my God, you just built an unbeatable competitive advantage. And nobody else saw it coming. So they reframed their narrative. They weren't just squandering money on brick and mortar. They were building the infrastructure required to support an on-demand economy. And the on-demand economy just took a little while to catch up. So when you skate where the puck is headed, man, you can play to win, you can play big. And so you're 100% right. That, look at history. I mean, from Apple to Kodak to all the big companies everyone loves, they were on the verge of bankruptcy. They had, shitty products. They've been, in crazy lawsuits. They've had founder drama. At the end of the day, if you are building something of value and you have good product market fit, you will be successful regardless. And no one's going to be like, hey, I realize that you just invented cold fusion, but you've been around for 10 years. I'm not interested in cold fusion because you've been around, but nobody cares. The minute you have a product that somebody wants, somebody will think they can make money on it or make money with you or make money from you. They're all in. I guarantee it.
I want to go into some of the other funding instruments that you've got experience with, like sovereign wealth funds. I do want to double down a little bit on alumni groups and then SPACs as well. Before we get there, one thing that's important for everyone listening to understand is that in Phunware's growth, aside from the capital itself, what they've really used that capital in part, at least, to do is really establish their product for scale. And that's something that's so important on the fundraising journey. And let's look at your app for a second, or your piece of software that you've developed. Maybe you've got it launched. Awesome. That's not so much the hard part. It's actually making it stay afloat on the market. That's where it gets really challenging. And about 4 in 5 apps launched in app stores get deleted after a single use. If you didn't know that stat, it's harsh, but it's true. And when I look at my phone, I've got so many apps that are sitting there, but they got the cloud icon next to them because I used them once and never used them again. So then how do you thrive without a profound product strategy experience? Well, you're not doomed to failure if you don't have the know-how in-house. You just need an experienced partner that can help you from start or from where you are today all the way through to scale. And that experienced partner goes by the name of Mikito. They are a team of design, software development, and product strategy experts that have built over 150 successful products for startups and enterprises. So what that means is that you're a startup today, so you need the scrappy, the savvy, and the agility to build for the right now. But ideally, you scale your company up and you end up potentially selling to enterprise. Well, Mikito's got experience about the startup and the enterprise level. So they've got that agility to work with you today, but they've got the experience to know how do you make this really stick in the market so that perhaps you yourself get customers like Phunware's had, like the NFL, like NASCAR, like the Olympics, right? Global iconic brands become your customers. You'll never know unless you talk to them first. So to get started, just head to mikito.com/hypeman. That's MIQUIDO.com/hypeman. Mikito.com/hypeman. Today on Startup Hype Man, the podcast, we're with Randall Crowder, the COO of Phunware, and we're talking about raising capital through hidden funding opportunities. Now, Randall, one of the things you mentioned before the break was the alumni groups. Now, I actually don't think as many founders are aware of this as an instrument of funding as I think should be. Can you just explain, and I know it's how you've raised capital, or one way you've raised capital in the past. Could you just go back to that and explain, like, what is the flow of money like for these alumni groups? Like, how do they come together? Why are they investing in the first place?
Yeah. The cool thing is they know, a lot of them know your journey. So, I mean, there are some alumni who are, masters of the universe, big private equity or venture capital funds, but you also think about, every time you go to an event, they always try to drag back that really successful founder or whatever. And so whether it's a family office, whether it's a professional institutionalized investor, or whether it's a successful entrepreneur, they are your alumni, and they are going to be predisposed to wanting to at least hear you out or help you or support you. And so I think that's a great place to start. I have some experience with it because I started Texas Venture Labs at UT. And that was just, it was interesting because I got to see firsthand the power of it. So Bill Gurley is a famous alumni of UT. A lot of people probably know him even more in wake of the Showtime Uber show, but early investor in a lot of, just kind of the pinnacle companies of our generation. Amazing guy as well. And so, he's a founder of Benchmark, and, Benchmark is one of the best investors you could possibly raise money from. He also happens to be an alumni of UT. And so I was running a program called Venture Fellows while I was at grad school to get my MBA at McCombs, got to meet him. And then I was having all of this experience while I was going through school in the real world, running an angel fund, starting a VC fund, doing a lot of things, kind of starting another company. And I thought, wow, it's a shame that more students don't get this kind of experiential learning. I wonder if I can help. And so I started Texas Venture Labs with the idea to give other graduate students this kind of real world experience with VCs and entrepreneurs that I don't think they were getting in the classroom. And I needed to fund it. And so I ended up, going to the donors, and you realize how powerful donors are and how powerful alumni are, when the alumni say, look, we're going to help support these initiatives, but we're not donating to the football team. We're donating to this to help, drive, entrepreneurship and innovation. And the dean at the time, he actually called me out when I was getting my diploma for doing a lot of this stuff. But, I went to the alumni. That's the power base. And they all know each other and they work in the same circles. And so we were able to ultimately kind of fund this organization through the alumni. And it's no different than in trying to fund, a startup or trying to fund a growth round. Going to those alumni, you already have common ground. And so I really encourage people to go to events, network, also help. I always say, as much as we're talking about, receiving something, lead with value, try to be helpful to people. I was building an organization. I wasn't really asking for money for myself. I was trying to help, kind of train and educate the next generation. And so I would always say, be careful of that as well. You want to be able to find ways to add value to other people when and where you can. So if they ask you to, even as a first-time founder, to come speak at a class or to help out with an event or mentor people, don't think, well, oh man, we're running out of money and I'm too busy. Always try to remember that, there's somebody else who can look up to you as well. And so to make sure that you're adding value, especially when you're working within your alumni circle.
Yeah. Help others before you ask for help yourself.
Yeah. Yeah.
Now there's another funding instrument that I would say is maybe, at least for the seed to Series A stage companies, perhaps the least thought of or even unknown, which is the sovereign wealth fund. Now it sounds like we're talking about an entire country when we say a sovereign wealth
Sometimes
fund,
you are.
like the People's Republic of Sovereign Wealth Fund or something like that. Can you explain what that is, how it works, and when it makes sense?
Yeah, so it's not that dissimilar. You think about, some wealthy prince in the Middle East, or, you think about, some corporations almost feel like this, but it's very large kind of strategic money. And again, it starts with it functions like a private equity fund, but it's tied to, a nation state typically, or tied to an organization that has kind of been blessed off on by a nation state. And a lot of them have them. And again, I think it comes down to, networking and really figuring out ways that usually, and this is why I always kind of say customer funded R&D is interesting, because it can lead to these things. We did another strategic deal with PLDT, which is one of the largest telecommunications conglomerates in the Philippines. And, that was with this idea of what could our software do for them and do for the country, and what are some of the ways we can add value. And so, while you're doing this customer funded R&D, trying to position yourself, like right now, I'll be totally honest with you, I'm networking my way back into Saudi Arabia, because I don't know if you've seen this plan for this Line city they have, but it's like probably one of the most audacious things I've ever seen. And it's this concept of building an entire city in a line that is more environmentally responsible and just super tech enabled, and effectively live, work, play all within a 5-minute walk. And it's all built in 3 dimensions. I'm like, I'm going to tech enable that thing. And then, Toyota's building mobility city in Japan. And I'm like, I'm going to tech enable that thing. We live in a mobile first world, quickly becoming mobile only. Phunware's got all the software. How do I get in there? And so you really just start going about like, okay, I know this person and this person. And literally, like right now, I have a friend who helped a Saudi prince write a paper on blockchain and, did really well. And he's always been really appreciative of that because he didn't fail out of the class and didn't make his, father look stupid. And I'm like, that's my end. And so, that's kind of how asymmetric funding has to be, paying attention to the battlefield, as you would say, where are all the moving pieces, where are your points of vulnerability? How do you get access to certain things? And so sovereign wealth funds function, I think almost, it's harder to get into them, but there's an interesting dynamic to that because they do their own thing, right? So I like that. Like they're not worried about, well, is, Benchmark going to invest? Is Sequoia? But they don't care about Silicon Valley. They got more money than Silicon Valley combined. Saudi Arabia doesn't care what Silicon Valley's investing in, and so you have this ability to have a one-on-one pitch to somebody who is not thinking about, peer pressure or community perception. They're just thinking about you as the entrepreneur, you as your company, and do they want to fund it? And oh, by the way, if you get into that and they like you and you can maintain that relationship, this is, think about like SoftBank. It's effectively what SoftBank might as well be a sovereign wealth fund. SoftBank.
Well, actually, people don't know this, but a lot of SoftBank and Silicon Valley Bank's investable money is actually coming from the Saudi Arabian government.
Exactly. And I think that's real power when it comes to funding. Now, a lot of entrepreneurs don't make it through that process. When you start taking big money and you start taking it from very big organizations, taking a step back, I know we didn't talk about this, just the hazards of all of this. The minute you take money from somebody else, it's no longer your company. Stop thinking that. You might have, majority share, you might have voting power, but it's not really your company anymore. And the minute you take big money, you are expendable 9 out of 10 times. Now, some people get real creative with their contracts and they protect themselves, but you need to be basically Zuckerberg to pull that off. Most people, do not have that, or Evan over at Snap. As you do, when our next, I think we're going to talk about a little bit of the public funding sources. And once you go public, it is not your company legally. Lock, stock, smoke, and barrel. It's done. You are now, your only goal is to maximize shareholder value. It is not your company, and you work on behalf of the shareholders, and you can be removed, period. And so I think people need to understand that, because I think people have a hard time reconciling that. You saw they removed Steve Jobs, they can remove you. And, maybe they'll hire you back like they hired Steve Jobs back, and you can say, I told you so. But when you start taking money from people and you start taking money from sovereign wealth funds and the Silicon Valley elite, they are beholden to their money, their return on investment, not the entrepreneur. Now, ideally, the entrepreneur is the one who will take them to the promised land. But if they feel like you are not the one, you are expendable.
One more question here before we begin our wrap up. And this is looking, down the road as you start to make that journey towards going public. It's a vehicle that's been popularized over the last couple of years. It's called a SPAC, Special Purpose Acquisition Company. A friend of mine no longer is there, but was actually at FaZe Clan, which is the first ever esports team to go public. And they recently went public via a SPAC. Can you talk through, and you've got personal experience with this, like, I guess the best Wikipedia.
I used to have hair before my experience with this. And now I used to have a long flowing hair, and then we merged with a SPAC, and now I'm bald. What are you going to do?
Can you give us, the Wikipedia, the Cliff Notes version of what a SPAC is and why that would be a potential path?
Yeah. First and foremost, I would tell you, don't do it. Now I'm going to walk you back from it on where you can do it. SPAC for most people is not a good idea. It was not a good idea for us. And again, talk about a pivot, talk about learning, talk about getting punched in the face. If I could do it over again, I would 100% not do it. I wish we didn't do it. A SPAC is a non-operating entity that is taken public. It's effectively a public version of venture capital. You raise a bunch of money from people, you park that money in a SPAC that trades on NASDAQ. It doesn't trade because nobody cares. It just kind of flatlines, but it just sits there. And it's got a certain amount of time in which it can merge with a private company. The private company gets the money in the SPAC, and then the private company takes over the ticker symbol. So it's an easier on-ramp for a private company to go public, and it's called an S4 rather than an S1.
Yeah, and then you have to go through the S1 process and do the roadshow and everything.
Exactly. And exactly. That roadshow with Goldman Sachs or whatever. That all sounds well and good, but here's the dirty little secret. SPACs were never meant to find great innovative companies. When you have these masters of the universe with large funds, a lot of times they receive management fees based on committed capital. Well, what if they don't have anything they want to invest in? They call that cash and they commit it to a SPAC. Now they can pull down management fees on that committed capital, even though they never invested in anything. And the reason why they do that is because they can redeem from the SPAC whenever they want. They can park the money in the SPAC, pull down management fees, and the minute they want the money back, they can pull the money out of the SPAC. And all along the way, they get warrants in whatever company that SPAC ends up merging with, whether they leave their money there or not. It's a dirty little secret. And if you're an entrepreneur, you should kind of work into the deal docs not to allow this. You need to understand what money is going to be in that SPAC at close, because a lot of people are just parking their money in that SPAC and they have no intention of sticking around. And so even though this is a funding source, it wasn't for us. By the time we merged with our SPAC, there was almost 100% redemption. And so this was in December of 2018, right before the government shut down. A lot of funds were hurting and they needed the capital because the market was crashing. Everybody redeemed. And so we effected basically a direct listing. And this is why your example is really good when it comes to SPACs. The best people to do a SPAC are if you have name brand recognition. You already have community, you already have brand awareness. It is not a good vehicle just because you think you're a good company, unless you have just like crazy numbers. And if you have crazy good numbers, you might as well do an S1. But if you don't have crazy numbers, then you need to have a crazy brand. You need to be Richard Branson, Donald Trump, an esports team, Spotify. You need something where people go, oh, I know that company. I'm going to invest in that company, because otherwise you have no support in the public markets once you go public. And it will. Yeah,
there's no name equity, right? So
exactly,
what does it matter then once you're public if no one knows who you are?
And that's what people don't realize. There's the business of running your business, and then there's the business of being a public company. It's no different than being an elected official. Like, you have to actually do your job, which I question if anybody actually does their job as a politician anymore. But they spend most of their time on trying to stay elected or getting elected, yep. and they just kind of get distracted from their real business. But that's being public. You have to be in the business of being public. IR, investor relations, PR, marketing, roadshows, non-deal roadshows, shareholder meetings. There's all this stuff that you now have to do that you didn't have to do as a private company. And then, oh, by the way, the administrative burden. So if you're going to do that, you really got to understand, what are the resources you're getting? Is it worth the cost? And a lot of times with a SPAC, it is not, because, if you don't have that brand recognition that can really grow that community the minute you go public, you don't have a safety net. You don't have, you need analysts covering your stock. You need banks. You need some level of market making effectually, and you don't want that to be hedge funds, which are just shorting your stock and just trying to put downward price pressure and play this kind of churn game on volatility. And so be very wary of SPACs and read the fine print in SPACs. Look at the warrants and what those warrants can do. Because what you don't want to do is have a bunch of people who park their money, pull their money. Now they have warrants in your company, and sometimes they can cashless exercise those warrants. So now they can, zero cost basis, they can print money on your stock and put a lot of downward price pressure on your stock. So there's a lot of gamesmanship when it comes to SPACs. SPACs are like this financial engineering thing that, is almost like an ICO in the public market. So it's like, there's these crypto tools, which is a whole other funding source we can talk about next time. But, this ability to quickly print money, make some people some money, and then all of a sudden retail's left holding the bag, and you're like, well, where do we go from here? And sometimes that's a really hard journey. We've faced that journey firsthand, and it's been a challenge.
Let's begin our wrap up. Randall, where can our listeners find you? Where can they find Phunware? Where can they learn more?
Yeah, easy to find. I'm Randall Crowder on just about everything. Randall Crowder at Randall Crowder on Instagram. That's 2 L's. I'm Crowder Official on Twitter. I have Randall Crowder, but I have no idea what my password is. So maybe one day I'll figure out what that is and go back to Randall Crowder on Twitter. But for now, it's Crowder Official. You can find me on LinkedIn. Same thing, Randall Crowder. You can learn about Phunware, phunware.com. It's Phunware it's fun with a PH. We also have a really cool blockchain ecosystem we're building out, so you can download Fun Wallet on iOS and Android. You can actually check out Fun Token, which is our utility token. And then we also have a security token coming out called Fun Coin. So we're the first public company to ever kind of issue its own digital assets in this manner. So we're setting a lot of milestones, which are really cool. But yeah, I'm easy to find. I hope that this was helpful to people. If I can be more helpful, please let me know how. And please, help each other out. And really kind of look for ways to, again, not only be the best version of yourself in your own entrepreneurial journey, but how to add value to other people's entrepreneurial journey as well.
Randall, who is one person who you want to give a shout out to who's been helpful for you on your journey?
My mom, hands down. I think being supportive, but figuring out how to give me enough latitude to make mistakes and not hold them against me is something only a parent can do. I just found out that I'm expecting my first in March, and we found out a week before the wedding. I just got married a couple weeks ago, and so we announced it at the wedding.
Double congrats.
I'm adulting fast. I waited a long time, but I'm adulting fast. But that's what's on my mind right now. But it's no different than being a good CEO, a good founder, a good leader. Figuring out how to resource and support people, but also let them kind of pursue their own journey, their own learning, and being there to not just tell them you screwed up, but being there to help them on that journey. I don't always get that right, and I hope I can figure out a whole lot in the next 6-7 months to be just kind of half the parent my mom was. But my mom figured it out in spades and gave me enough room to learn and grow on my own, and so I owe her and my father, who has passed. I owe them, everything that I am today, for sure.
Let's now give our top 1 or 2 lessons or takeaways for the listeners based off of our discussion today. I'll go first and I'll toss it to you. Our topic today was raising capital through hidden funding opportunities. Obviously, we covered a lot. What I want everyone to walk away with is actually one of the things you said near the end there, Randall, which is there's the business of being in business and the business of running your company. You've got to be on top of both.
You're 100% right. I think I'll go back to the beginning of the call, when I kind of said this idea of the pain of regret versus the pain of discipline. And it sounds kind of like a t-shirt, but that discipline is going to those meetups. It's putting yourself out there. It's pitching everywhere you can. It's not trying to game the system. It's, being consistent and authentic. Discipline is consistency of action. And as an entrepreneur, that is so critical because motivation will come and go. Motivation, you'll be in state and you'll be like, I'm going to take over the world. And then the next day, you're down. And so you got to have conviction. Conviction will beat motivation every day. And conviction comes through discipline. It means you're going to be organized and dedicated and committed. And when it's hard, you're still going to do it.
My final question, which is how we end every episode on this show. Fill in the blank, Randall. Entrepreneurship is blank.
It's life. I mean, entrepreneurship is life because it will show you what you're made of. It will show you what it's like to operate without a safety net. I get it, the allure of the big corporate gig, but you're never going to know, could you do it on your own? Could you, and I'm not saying everybody's got to be an entrepreneur, don't get me wrong. But this is kind of, this is something that makes you feel alive. It is working without a safety net, knowing that if you don't do it, no one else will. My wife gets on me all the time. She's like, why are you working on the weekend? because like I don't have anybody else to do a lot of the things I do. And that gets me up in the morning. You know, entrepreneurship makes you feel alive because, you know, you really get to test, you know, the outer limits of your potential. And you really get to understand what you're made of, and you really get to put yourself out there and then have people respond to that. And then, you know, that is, I think one of the most special things you can do is put yourself out there and be willing to, you know, withstand the criticism. And, you know, if you're willing to persevere, you know, God put, you know, the most amazing things in your life on the other side of terror.
Entrepreneurship is life. He is Randall Crowder, COO of Phunware. Randall, thank you so much for joining today on Startup Hype Man, the podcast.
Thank you for having me. Really appreciate it.
And listeners, don't forget, coming soon is the official Startup Hype Man mixtape. That's right. We're dropping a hip hop album about the founder journey. And up to this point, I've been giving the tentative title of the startup mixtape, but I think I now have the official title of the album of the mixtape, and we'll see if it holds. But right now, the tentative title that I'm going with is Burn Rate Volume 1. So be on the lookout for Burn Rate Volume 1 hitting your Spotify feeds late 2022. But if you want to be the first to know it and get exclusive access to the singles when they drop before the whole album drops, just subscribe to our point of view letter at startuphypeman.com. We'll see you next week. That's a wrap on this one. Shout out to our guest once again for sharing their story with us. If what you heard impacted you, do one of three things. 1, let our guests know. Reach out to them directly. They love hearing from you. 2, leave a rating and review on Apple. Or 3, simply hit the share button and share this episode with one friend who you think would benefit from hearing it. Catch our full episode archive at startuphypeman.com/podcast. And if you want to make your pitch not suck, reach out to us through the website. That's all for this week. We'll catch you next time. Raj Nation out. Believe the hype.